Hi guys, my name's Colin and this is Colin Talks Crypto. We're going to talk about ChainLink. We're going to talk about EOS. We're going to talk about Vigor Protocol. We're going to talk about the economy, including the yield curve, oil prices, just a little bit of everything here. We're going to talk about a new program that I'm designing to help me keep track of my trades as well as good buying opportunities. Thanks for joining me. Yes, I have fixed my microphone. I isolated it. It was actually a piece of failing hardware. So I'm really happy about that. It's nothing worse when you're trying to make a video than having subpar audio or video quality. I really take pride in bringing you guys the best quality production that I can. And so hopefully this is a lot better. We'll start off with a little bit of a general economy checkup here. Let's just take a look at the Dow Jones Industrial Average. I mean, I have to look at this and just let my jaw drop a little bit. You know, it's basically recovered, and we're not going to spend a lot of time on this because you guys know as well as I do, if you've been following my channel or any sensible economy reporter, that this is just completely fabricated and based on whimsical federal printing of money and purchasing of assets. So there's nothing real about this chart. That's why I would not advocate being in the stock market at all unless you enjoy gambling, unless you enjoy the casino and you treat this the same, treat your stock market money as play money, then by all means go for it. Jump on that, Tesla skyrocketing stock and maybe it'll go up even more. Who knows? Anything is literally possible. The stock market could go up, the stock market could go down. There's not really any technical fundamentals that apply here because it's not based on a free market. It's really based on a central entity controlling and dictating the entire economy at this point. So really just remarkable to me how we could have such a steep and sudden crash and then, printing trillions and trillions and trillions and trillions of dollars. And it did kind of work. It propped up, when I say it worked, it propped up this graph. If you think that this graph is like a proper assessment of our economy, then sure, it kind of worked, right? But in reality, it did not work. We have the highest unemployment we've seen in recent history than ever before. And as I tweeted recently, I'm really wondering how that's going to play into tax season and the ability to pay taxes. I'm willing to bet we will see the highest inability to pay taxes that the IRS has ever seen before, purely due to unemployment. How can you pay your taxes if you aren't employed and don't have a steady stream of income? And so unfortunately, a lot of these small businesses have been utterly devastated. I actually spoke with a guy. I was traveling and I was in Oregon, and I spoke with the owner of a small restaurant. It was a beautiful restaurant, had a view out over the city. It was up on the 3rd floor. We ordered some great food, and the owner happened to be sitting right next to me, and he made a joke about how he owned the place, so he was biased on how good the food was. And so I just took that opportunity to ask him, how was this affecting him? Here's a real person with a real business, and it wasn't planned discussion or anything. And he said it's been horrible, it's been devastating. He says that he's happy at this point just to break even. And he said that with a straight face. And I couldn't help but feel a little bad, for the guy breaking even. That's not the way a business operates, and that's not the way that a business stays in business. You can't break even indefinitely and stay in business. So I really hope that he turns a profit because that's the only way he's going to stay in business. That's the only reason it would be worthwhile in a free market economy to be doing what he's doing, to offer that great service of great food to people. So that's just a small sampling out there. It's happening all over the world in every country. I know of people in Pakistan and India that are struggling to make ends meet. I know of people in Puerto Rico and the United States. So it's not an isolated incident. This chart is utterly fake and total BS. The economy is not doing well despite this uptrending graph for months on end now. And I do thoroughly expect the stock market to crash again to new lows, to greater lows than ever before, at least in the past 50 years or more. And I think that we're at the tip of something. I'm not a doom and gloom guy, but I do keep it real. I think that we're at the beginning, the precipice of what's to become a Great Depression. And I think that if you look historically over the charts, it does take a little while for that to pan out. It can take like 2 years to actually truly bottom out. So when you step back and you put that in perspective, you realize that we're at the beginning of this, if it's going to happen like I'm saying it will, and I really hope it doesn't. But if it is going to crash down to these new lows, we could be seeing that in like 2 years from now, or maybe a year and a half. We've gone, what is it? It's only been 4 months. It's July, and this crash happened in March. It's been 4 months. It's real easy to lose sight of things when you're myopically focused in on the economy day to day. You know, every piece of news kind of magnifies when you pay real close attention to the news. You know, so you might think, oh, we're doing okay. But when you step back, you realize that the fundamentals are not aligned with the actual direction of the chart. There's something that's coming, and I think it's not going to be pretty. So I do feel that in the next year and a half, approximately, give or take, I do feel we are going to see a humongous and incredible crash down to way lower than we saw back in March. And so tying this all back into cryptocurrency, I really do wonder how Bitcoin will correlate or uncorrelate to that. It was quite frightening, to be honest, in March when we did see this crash in the stock market, because we saw it pretty much economy wide. We saw it relating to Bitcoin crashing, we saw it to gold, silver crashing, everything crashed. So as much as we like to believe that alternative assets are decoupled from the dollar, unfortunately, the actual proof shows that it is not yet. And I don't think that that's always going to be the case. It's just a matter of when do we decouple. And so will the next crash that I'm predicting be a decoupling moment, or will, in the worst case scenario, will Bitcoin follow it down? And I think that if it follows it down, it will rebound shortly thereafter, but these crashes are unnerving to say the least. So onto the Treasury yield curve, you can see here, this is the spread between the 10-year and the 1-year. And anytime it goes below the red line, which is an inverted yield curve, that portends a depression or a recession. And so I think that we're in one right now. We just don't really see it on the charts. But if you ask the guy from Oregon about his restaurant, I bet you he'd say we're in a recession. So you can see that every time that the blue line dips below the red line, it skyrockets upward, and that's the new recession depression period. I think that this is lining up exactly the same, and here we are. Basically, in the future, this is going to be a gray colored part on this graph indicating a recession. So we're in it right now. And if this graph pattern repeats, which there's no reason to indicate it won't, it looks like we're going to see a massive surge upward here on the spread between the 10-year and the 1-year. So that's what I'm looking out for next on this chart to really verify truly that we are in what I think we are. I think it's just a lag, and the delay is the charts showing what reflects reality, which is joblessness and all the negative things that are happening in the economy today. So right here we have crude oil prices. And as you know, they dropped down to, I mean, this chart only shows going down to $18, which is a lie. The chart actually went down to like negative $40 per barrel. And right now it's back up to, I don't know, 35 or 40, $40.65 as of July 17th, which was yesterday. So a sharp rebound in this very, very fake economy honestly doesn't tell me much. All right, now let's jump into some crypto news. So starting off with ChainLink. I don't really ever cover ChainLink. It's been doing phenomenal. There's a couple of DeFi projects out there, actually quite a few DeFi projects out there that have been performing phenomenally. We've seen like 20x's and 40x's. It's really been mind-blowing. So here's one of those examples, ChainLink, which was, back in December of 2018 at 22 cents, and now we have it at $8, over $8. That's a tremendous increase in price right there if you held on to that, which is really amazing because this is essentially the bear market for Bitcoin. So it's like defied gravity when it comes to what Bitcoin's doing. So if you had some money in ChainLink, you've been doing well. Which brings me to my last point on ChainLink, which is as awesome of a platform as it is, just graph fundamentals here. This climbed extremely fast in a very short period of time, which to me, if I was holding ChainLink right now, I would be hitting the exit like quick. I would be selling, and not to say that it's not going to go up further. I'm sure it will, especially in the upcoming bull run. But right now, I would be taking some profits and then rebuying in lower. This is not financial advice. This is just what I would be doing if I was holding ChainLink. And I want to get into a little creation that I've been working on. It's very much a beta, and it's not available online for anyone to access, but it pulls data from price aggregation services. So I get the complete price history of all these different cryptocurrencies. And for myself, I'm tracking the ones that I'm interested in. So I've got it tracking Bitcoin, Ethereum, EOS, Kyber Network, DApp token, Vigor, IQ token, Store of Value, Meet One, Swissborg, all these good coins here, a lot of DeFi as you can see. And I've added functionality where you can place a buy order if you had one. So I've simulated some buy orders here. Like let's say that the Ethereum USD price dropped to $90.25 and I had a buy order on a platform. This allows me to plot all my buy orders, all my limit orders, whether it was a sell order or a buy order. And so I can easily see at a visual glance when the price drops into that range or climbs into that range. So I made it so that I can put markers on the charts and view them all on one page for easy reference. And I wanted to show you another feature I built into this. So here's the Bitcoin chart when you zoom into it. And I made it customizable so it can be as big or small of an image and as much detail as you want. And I made it so that you can add the 2-year moving average to the chart. And so the blue line indicates the top of the 2-year moving average and the yellow line indicates the bottom of the 2-year moving average. And historically, pretty much any time the Bitcoin price was below this yellow line, it was an amazing buying opportunity. And likewise, anytime it was above this blue line, it was a smart time to sell. And so I used this to take a look at when should I be buying, when should I be selling. And I made it so that this feature will work on any graph. And not only did I make it so that this feature will work on any graph, I made it so that any pair of any ticker symbol to any other ticker symbol can be calculated, even if it's not available on exchanges. So like if I was interested in DApp token and Ethereum, I don't think that you necessarily could find that trading pair anywhere because DApp token is an EOS based token, but my program would be able to correlate that, draw a graph, and draw a 2-year moving average, assuming there was enough data to draw it. So just wanted to share what I've been working on here. So right now it shows that it's close to a good buying opportunity, but not quite there. It shows that in March it was a good time to buy, and I would agree with that. I wish I had bought more Bitcoin in March on that crash. And this also very true. This was a good buying opportunity for Bitcoin right here in this price range. So let's take a look at some other graphs here. We have Ethereum USD graph, and then I applied the 2-year moving average, and here's the 2-year moving average. I bet you no one watching this video has seen a 2-year moving average drawn like this with the, by the way, the blue line is the 5x of the 2-year moving average. I got this from another website, which I've shared in previous videos. So the yellow line is the 2-year moving average, and the blue line is the 2-year moving average times 5. And it just happens to be a very useful metric. In other news, we have 20 million EOS rented as CPU on the REX from EOS mainnet. And it was reserved for account bid.eos. So what happened is this pushed the APR up to 4% for token holders. And as you can see here, it shows that the daily APR was pushed up to 4% for anyone who's been lending their tokens on the REX, the resource exchange on EOS. And that also pushed up the 7-day average and pushed up the 30-day average a little bit as well. So if you had tokens on there, which is really, really smart to have any tokens you're not using in EOS staked to the REX, you would have gotten a nice payout on this day. Also, it's a good idea to have your tokens voting for a rewards proxy, and that's a second way you can make income. So on this day here, you actually could have made 4% on REX and like 2% or 1.5%, depending on what rewards proxy you're using. And so you would have had like between 5 and 6% return daily on your EOS on this day. Pretty incredible returns. I think more importantly than the financial benefit, I think that it shows the usage of EOS is moving upwards, and someone wanted an enormous amount of EOS tokens to do something with, to build their dApp with, to build. And building is what puts the value in the ecosystem. So I'm really excited, not just so much for my 4% daily income on that, but for the future that it portends for EOS and the great things that could be being built. Because someone's not going to put that money into it if they don't seriously think that they can make more than that back on just a purely business and investment method. Unless they're a complete idiot, right? They probably have some pretty big plans in place for those tokens and that CPU. So it's exciting to see the resources being consumed because it means that there is building going on with EOS. Lastly, I'm going to share a little announcement here. I shared this on Twitter. I have become a custodian candidate for the Vigor Protocol. And so I've been thinking about it for a while. You know, the price does show that something is happening right on this platform. Something is going in the right direction and the right decisions are being made. And from what I can see, that is backed up in actuality. You know, they have a platform here. They're launching in about 2 weeks on August 1st officially, and it's already operational. You can already borrow, you can already lend. And here's a screenshot of actually like borrowing some VIG tokens and lending your EOS to get a reward on it. I'll probably end up doing another video on this someday in the future if there's enough demand for it. But basically, Vigor is a stable token similar to DAI. However, Vigor is superior to DAI in ways that I will get into in the future. But the VIG token, so there's Vigor, the stablecoin, and the VIG token. The VIG token is the governance token. And the VIG token is what a custodian would get voted in with by other token holders holding those VIG tokens. And there are 21 custodians in charge of making decisions on the Vigor network. And so that group of 21 puts in place multi-sig upgrades, etc., to monitor and uphold the Vigor network. One notable thing about Vigor is that it's not even listed on CoinMarketCap. As you can see, it doesn't come up when I search for it. It's only available on like Nudex and one other exchange. When we go to CoinGecko, which has all the coins, you can see VIG here. And let's take a look at it over a 90-day period. And you can see, like other DeFi projects, we have seen a tremendous climb in price. It went from 0.00056 cents to 0.011 cent. That's a 20x increase in price over the past 5 weeks. Pretty incredible. Will it climb higher? Will it drop? I have no idea. Make of that what you will. This is not financial advice. Also keep in mind, check out the volume. I don't think the trading volumes are super high. You know, $13,000 is not a lot of trading volume. And so just be aware of that. So again, I'm just diving in here, but from what I can tell, it's very exciting and I am excited to be a part of this awesome team. One of the failing points of DAI, which is actually my previous favorite stablecoin, and I still like DAI, don't get me wrong, but DAI, unfortunately, invited collateral options from centralized stablecoins. So it included USDC and USDT, and those are centralized coins. And we actually saw recently on one of those, I forget which one, I think it was USDC, there was actually a freeze of accounts. And so that's not a smart choice to include in your stablecoin, because then you have a decentralized stablecoin being pegged with non-decentralized assets, and that can lead to other problems. So one of the things I like about Vigor is that it builds upon the mistakes observed from DAI and improves upon it in every way possible. And so we're going to have a more stable $1 peg. And I'm just really excited for all the features that Vigor brings to the table. Not to mention that you can lend your EOS and get a passive return. And you can also borrow by putting your EOS up as collateral. And in the future, more collateral will be offered as an option in the system, but right now it's EOS as the collateral. So this is an example of DeFi. And DeFi to me is such an exciting sector of the crypto space right now. As I've mentioned before, I am putting my eyeballs on DeFi, and I think that DeFi is going to be one of the huge heavy hitters in this upcoming bull run. And I think that it could be leading the market much in the way that the ICO boom led the market back in 2017. We have so many DeFi projects springing up in the crypto space and skyrocketing to super high valuations. Not to say that that isn't a bubble, but it does show an enormous amount of interest. And I think that a lot of it is very genuine and will be lasting in the many years to come. I even invested, I forgot to talk about this. I invested in a crypto related project, and I really would love to talk to you guys about it. And I've been trying to think of how I can frame this so that I can, but I think I'm just going to have to leave it at that. I've invested in a fairly large crypto related project, and the reason I can't talk about it is because I signed a non-disclosure agreement that was part of the deal. And so I'll just say that I'm excited about it. I'm looking forward to it. Maybe in the future, when I understand what I can share and what I can't share, I'll drop you guys some hints. That's all I have, guys. I wanted to make this video and just kind of cover the news, cover various topics, and stay connected with you all. I know it's been a little less frequent for how often I've been putting out videos. I just have a lot going on. For now, that's what I've been doing. Take care. Have a great day, and I'll talk to you again soon.